And welcome back to the ZMC Business Hour, a business show brought to you by the ZMC Network, a network dedicated to bringing communities together. The Business Hour is every Sunday morning, and we do our utmost best to bring you local community leaders to come and share their knowledge and their experiences over the past few weeks, or over the past few months actually. We've had some phenomenal guests, and today is no exception. Currently, the world is in a pandemic. It's a global issue, and everybody and anybody has been affected in some way or another. The business community, however, has possibly been the biggest victim of this, with businesses folding daily on a global level. But if we look more closely to home and to the UK, an article this morning by the BBC suggested that from January till June this year, 11,000 retail outlets closed down. 11,000 retail outlets. So the business community is in a dilemma. We have no certainty what the future holds. We are facing imminent lockdown, and it's very, very nervous times. So our guest this morning, a specialist in insolvency and bankruptcy, has been dealing with this sector for many years now. And has kindly agreed to come on this morning and share some tips and advice on bankruptcy, insolvency, and potential rescue packages for our businesses. So, I'd like to welcome this morning Majid Salim. Majid, are you with us?
I'm with you, Abid. Thank you for having me on there.
And thank you for joining us. I know we're doing it remote. I would have preferred it much more if it was a face-to-face, but when Boris says you can't meet, that means you can't meet.
No, it's good. I think everybody should be careful in the current climate and, exercise a bit air of caution in dealing with people as well.
Yes.
We're all in it together.
Thank you very much for joining us this morning. Could you just give us a little bit of an insight as to your profession and what you actually do?
Okay. My background for the last 19 years has been pure insolvency. I've been advising directors, banks, shareholders, employees on the options available to them in a scenario where the business is in financial distress.
Okay.
That could be either cash flow problems, it could be entering into a liquidation or an administration process. I'll go through those processes later on what they are and the differences between them. But yeah, we were part of a larger firm before called Kingsland.
Yeah.
That firm was merged to and now back to my roots of running a boutique independent licensed insolvency practice from our Birmingham and Leicester offices.
Okay. Could I just remind the viewers, if you have any questions, please feel free to call in on 0121 753 4131. We are beaming live on Facebook, on Instagram, on LinkedIn, and on Twitter. If you have any questions with regards to your business, and if you're thinking about bankruptcy, if you're thinking about liquidation, if you've got these fears, please feel free to call in, and we will do our level best to get your questions and your queries answered. So, Majid, insolvency and bankruptcy, a term very freely, very broadly used. Could you please just explain the difference between insolvency, bankruptcy, and liquidation?
Okay. Insolvency is a generic term for all the processes of financial distress. Liquidation applies to limited companies only. That's when the company,
Okay.
by either two methods, is insolvent. The first method on a cash flow basis,
Okay.
the company does not have as and when they fall due. The second, the liabilities of a company exceed its assets, and therefore it's rendered insolvent.
So
With
by
a practical example,
so by liabilities you mean that the money that they owe out is
That's correct.
less than what they've actually got got coming in. Now, could that include staff wages? Could that include their own salaries, bonuses, whatnot?
Yes, exactly. So in the current pandemic,
Yes.
turnover has been slashed drastically.
Okay.
However, the expenditure has continued to be the same. They're
Okay.
still paying the rent, they're still paying the wages, they're still paying the utilities, they're still paying the suppliers. So
Yeah.
that's going
Okay.
to create a negative effect, isn't it?
Yeah, definitely. So, if as a director you know that you're a bit short this month, however, you have an invoice that's about to be paid next month and you fall
Yeah.
short this month, would that still qualify you to go into liquidation or bankruptcy?
If you believe there's hope in terms of there's money coming in to render you solvent again,
Yes.
then I always say to people, insolvency is the last resort and a drastic step. So if there's other options available, such as financing, invoice discounting, or simply speaking to your customers and to get those invoices paid a bit quicker, as well as the alternative, which is speaking to your suppliers and asking for a bit more leeway.
Okay. And
And in the
can you
current
give us
climate, we're all in it together.
can you give us any, without mentioning any names, can you give us any examples of such transactions or such deals that you've been involved in?
Okay, well, one of the ones reasons I've worked on was a recruitment company which had a significant liability with HMRC. We're talking six figures liability. They approached us. Now, they've been advised by another liquidator to put the company into liquidation. The first step I said was if you put the company into liquidation, the contracts you have will be rendered insolvent and they'll
Okay.
be terminated. So you're better off picking up the phone to HMRC and asking for a something called a time to pay arrangement. It's something HMRC offer themselves.
Okay.
So we spoke with the client. We made sure HMRC have two criteria with time to pay arrangement. The first criteria being that all the outstanding tax returns have to be filed, how much money you owe them. The second question is you've got to give them an explanation why you are where you are and what you're going to change not to be in that same position again. So this particular client, the director diversified his business. He took a lot of cash out of the business, which left it insolvent. So he said, "Well, I'm going to put that money back in, but it will take 6 months." So we rang up HMRC, made sure that all the company's tax returns were filed. They were happy with that. Then we wrote a simple two-page report explaining what happened, why the company was in difficulty, and
Yes.
what the director will be doing going forward to render it. They took that at face value and accepted that, and without issuing a winding up against the company, they agreed to a 16-month payment plan,
Okay.
which means the company's got no worry. All they've got to do is make sure the monthly payments will be made and the business survives and the contracts that it has remain intact in the business.
Okay. And in terms of bankruptcy or insolvency, what's the
Yeah.
core fundamental differences there?
So bankruptcy is purely for individuals. So it applies to me and you. So if our liabilities are more than our assets,
Is that as a sole
or
trader or is that as a limited company?
sole trader, purely as a sole trader,
Okay.
and it's for individuals only. So it could be me as a consumer creditor. I've got
Yes.
credit cards, loans. I can't afford to pay them. I've lost my job. I've got to consider bankruptcy as a real alternative to start again. You know,
Okay.
but with bankruptcy, what you got to be mindful is when you're made bankrupt, any assets you own at the date of your bankruptcy, you will lose control of those assets. Those will be used to pay off your liabilities. So if you
Okay.
own a property, a car, shares, money in the bank, all these are your bankruptcy assets, and they will be taken over by a bankruptcy trustee to realize and pay off the people you owe money to. It's the same principle in liquidations, but liquidations is for limited companies. So when the company goes into liquidation, the liquidator comes along, asks the directors, what does the company own? Bank account, stock, leases, contracts, physical assets, tangible assets, goodwill. So with then those are realized or sold off on a
Yeah.
piecemeal basis.
Okay.
The money is put in a collective pot and then distributed to the company's creditors in a sequence of order as prescribed under the law.
Okay, so over the past few months, throughout lockdown and throughout the pandemic, it's been a common theme on the news that a certain company is calling in the receivers, a certain brand is calling in the receivers, and we've seen huge companies fold within this 7 month period. When they say that they're calling in the receivers, what does that actually mean?
Okay. The term they've been using is administrators. They've been calling in the administrators. Now,
Yes.
administration is a court process which allows the company to continue trading as one of the viable options. So, if a company enters into administration, an administrator is appointed. The administrator's job is to maximize asset realizations. Now, the main difference between
Would
an
that
administration,
would that effectively mean that they would sell off assets or parts of the company to try and get back as much as they possibly can?
yes, they will. Now, the administrator's main duty is to maximize realizations for the company's creditors. And the
Okay.
one thing that an administrator can do, which a liquidator cannot, is trade the business. So, if an administrator can trade the business, he keeps the goodwill value of the business intact, which
Okay.
means he gets money for that.
Okay.
And that's why the bigger brands, they like to sell off, put it into administration because the brand name is worth something itself. And
Yes.
that's where they will get a significant sum of money back.
Okay. So you've answered the question about HMRC, but if somebody does have HMRC arrears, what are their options?
Okay. So HMRC is like any other creditor. If it's owed money, it has a right of action against the company. Whereas other creditors are generally more commercial about what actions they take against the company. HMRC have a duty to issue a winding up petition to remove bad and defaulters out of the system. So if the company does nothing, HMRC will issue a winding up petition to the company's bank account will be frozen, and it will enter into a compulsory liquidation process, which is managed and operated through the government insolvency service.
Okay.
Now, that's the option available to HMRC. What are the options available to the company? The company is first seek correct and appropriate advice from a licensed insolvency practitioner.
Okay.
Once they've had that advice, we can look at what options are available to them. A lot of the times, we are still able to place the company into liquidation before HMRC does it with their consent. What we're able to do is exercise an element of control, dispose our company assets, maximize realizations, and ensure a return to creditors. Whereas the compulsory route, the fees tend to be greater for that process, which means there's less money at the bottom end for the company's creditors.
Okay. So when a company becomes insolvent, what are the liabilities on the directors, or are there any particular implications on the directors of the company?
That's a very interesting question because it's a very evolving set of circumstances that's been happening over the years. Now, if you look at it on the face value, a director is merely an employee of a limited company.
Yes.
And that limited bit in the company's name means limited liability, which means nobody can pursue the directors personally unless they've given a personal guarantee.
Yes. Okay.
So,
Has there been any circumstances otherwise?
like I said, it's a very evolving piece of legislation that's
Could you,
happening.
I mean, in your line of work, could you give examples where a director has been implicated and an example where a director hasn't been implicated?
Okay, so limited liability, director is an employee. The creditors cannot touch the director at this point.
Okay.
However, if they can prove the director has breached his fiduciary duties by way of either negligence or fraud, then the creditor has an option to pursue the director personally under a tort of negligence claim.
Okay.
And then that's where we're seeing a lot more changes, even to the extent where HMRC are now using something called a personal liability notice, a PLN, to issue against directors where they believe that the directors have suppressed sales or underdeclared taxes, because they've breached their duty by doing that. And
Okay.
therefore, they're using Schedule 21 of the Finance Act to pursue
Okay.
directors personally. So that's an example I've seen, a live example I've seen going forward. But yes, I mean, I've also seen letters, company directors, you are personally liable for the company's debt.
Okay.
Now, the first thing I said to the directors in those cases, when you entered into contract with this particular creditor, did you sign a personal guarantee? Can I have a look at the terms and conditions, any account opening forms? And if there's no mention of a personal guarantee, then the creditor does not have a right to pursue the director personally at all.
Okay. So it's all down to directors. If they've signed a personal guarantee or if they've given a personal guarantee, then they can be personally held responsible or liable, which means that the creditor can go after their personal assets.
That's
Is that
correct,
correct?
yes.
Okay.
That's
And
correct.
if they haven't signed a personal guarantee, then the buck stops with the limited company. The minute that the limited company goes insolvent, that is the be all and end all of that matter.
Yeah, again, correct. That's right, yes.
Okay.
Yeah.
So this whole bounce back loan that Rishi Sunak gave to everybody, and there was obviously issues when it first started. People weren't able to get them, and then the taps opened and some individuals who had several companies took out loans on every single company, and there was speculation that people may be taking the loans with a view or a plan to possibly bankrupt or make their company insolvent. Where does that stand? What's the rules and regulations around that?
Okay, a very, very controversial topic, to be honest with you, because firsthand we are seeing loads of inquiries where businesses are approaching insolvency practitioners, my firm included, where the whole intention is to liquidate and not to repay the bounce back loan set of monies. Now, what we're advising as the directors is, as insolvency practitioners, we have a duty to investigate the company. As liquidators, we have two jobs. One is realize any company assets, and two, investigate why the company failed. So the things we would be reviewing are the company's set of accounts, company's bank statements, company's transactional histories, any ledger books, to see where these monies have been used. I mean, I've been gobsmacked where I've met individuals who've been trading 3 months prior to the bounce back loan being introduced in March
Yes.
2020, applied for a bounce back loan, and certainly have spent all that money on personal expenditure,
Okay.
and yet they wish to come and liquidate the company. My advice to them is every single expense you've made has been a personal benefit, not for the benefit of the company. Therefore, that can be pursued by the liquidator as an action against the director personally. Those money would need to be repaid, and the company's position need to be restored to as it was before those funds were dissipated.
Okay. So
So
this whole bounce back loan it's a very controversial issue, as you say. So individuals that have taken out the bounce back loan have gone on and purchased. I mean, I know for a fact that the sales of high-end motor vehicles, something that you're a keen fanatic of, they were up. The property sector took slightly boomed because people were buying properties, people were buying top-end cars. Now these are obviously for personal use. If they then liquidate the company after a few months and they don't use an insolvency practitioner, I mean, do they have to use an insolvency practitioner to liquidate the company, or can they just do it themselves?
no, insolvency to place a company in insolvency procedure, it has to be done through a licensed insolvency practitioner. There's no other way.
Okay.
Now, what the misconception is out there is I can take the loan and I can leave the company on the shelf, or I can dissolve it, which is another method through accounting, and there will be no recourse against me as a director. And what I touched on upon a bit earlier, my previous question was a director has a fiduciary duty to maximize company realizations and enlighten shareholder value.
Okay.
Now, if he's not doing that by spending company money on personal assets, that's a negligence claim.
Okay, so if somebody's taken out a bounce back loan and they go purchase a top end vehicle and they put it under the company saying that this is for the company, this is as a company expense, and then they liquidate the company, or they and we'll come on to dissolve shortly, because there's obviously a distinct difference between insolvency and dissolving. But if they liquidate the company, what happens to that asset? What happens to that vehicle?
If the companies pay for that asset, in simple terms, it's a company asset.
Yes. So
If the company
the
goes
liquidators
into,
take over and they sell them assets off.
that's correct, yes.
Perfect. Okay.
So if
So when
whether
you
it's a
mention,
property or a
so
high-end
the
vehicle,
term you mentioned, dissolving a company, what's the difference between liquidating and dissolving, or putting the company back on a shelf?
okay. Dissolving company is for those individuals who set up a business, took no activity in that business, or took activity but paid and filed all the returns up to date, and the business has no further purpose.
Okay.
And therefore, they do a striking off application. Now, what I advise people striking up application, if you read on the Companies House website, is a statutory declaration form. When you're signing that as a director, you're making a disclosure as at the date that you're signing that the company does not have any known debts. Now, the interesting case I've seen from HMRC was a restaurant up north where they came to me for some advice. I advised them to go into liquidation. They said it's too expensive. We'll just do a dissolution at Companies House. So the director signed the document and filed it at Companies House. The company 2 months later was dissolved. What happened later was HMRC picked up that particular company file and said, we wrote to the company on this date, and we note that you sign a statutory declaration 2-3 months later saying the company had no date. So therefore, that's a negligence and breach of your duty as a director, and HMRC are now pursuing the director personally for that breach.
Okay. Okay. So it is a very serious matter. And when they pursue the director personally, then they can go after his personal assets, his house, his own personal assets.
That's correct.
So,
Yeah.
so going back to the bounce back loans, sole traders can also get the bounce back loan, or they've had the bounce back loan?
I understand they can, yes. Certain lenders are providing them directly to sole traders. But then with sole traders, they are personally liable for those debts. And if they can't pay that debt, the bank, then they should consider bankruptcy as a real alternative of starting again.
Okay.
But
So
if they make themselves bankrupt, they
when
lose all their
someone does
assets.
become bankrupt, what are the
Mhm.
implications on that individual? You can't get
Okay.
insurance. That's a given. I mean, we
Yeah.
have this challenge daily where even for your car insurance, your property insurance, or any kind of insurance, if you own properties that you rent out, a question on there is, have you ever been bankrupt? And if the answer is yes, then you will most certainly struggle to get insurance for even for your moped. You know, it's become compulsory now that we ask that question. But what are the implications are there for people who have become bankrupt, and how long does the bankruptcy last for?
Okay. Your bankruptcy lasts for 12 months from the date you're made bankrupt.
Okay,
So if I'm made bankrupt tomorrow, my discharge from my bankruptcy will be in 12 months' time. Now, in this 12 months period, I cannot be a director of a limited company. If I'm bankrupt, if I enter into any business activity, I must disclose that I'm a bankrupt.
okay,
If I come in receipt of any monies or assets whilst I'm bankrupt in these 12 months, so if I come into inheritance or a large fund from somewhere, by law, I have to disclose that to my trustee in bankruptcy.
wow, okay, okay,
Now, the bankruptcy stays on your credit file for 6 years. Now, which means you're released from your bankruptcy. You can, 12 months later, you can do whatever you want. You can become a director of a limited company, carry on trading, get a job, etc. But it stays on your credit file for 6 months. So when you're doing a mortgage application or a credit application, it will be picked up.
okay, okay. So you have a company and the company becomes insolvent. You employed 20, 30, 40 people. What happens to the employees in that situation?
Okay. So employees of a employees employees are lucky in the UK because they are protected by the Employment Rights Act. Now, employee of any company has four entitlement of rights from his employer. The first being wages, the second being holiday pay, third being payment in lieu of notice, and the fourth being redundancy pay. Now, what we're seeing, I mean, you touched upon the 11,000 shops closing. We are seeing loads of business are closing. I mean, only Friday, we closed a gym down south, and that had 10 redundancies. And I physically went out because it's an emotional process for
Definitely.
staff to take on
Yes.
board. So I physically attended the site to ensure that the premises are secure, and also at the same time formally making the employees redundant and explaining to them their rights and their entitlement, because it is
Okay.
an emotionally charged event. So in that brief meeting with 10 employees, I discussed to them, well, you're technically protected by the Employment Rights Act.
So
You have four claims.
when you say protected by the Employment Rights Act, what does that actually mean? I mean, if the
Okay, so
company is insolvent and there's no money in the company,
yes.
how are the employees protected?
Okay, so by
What's the
statute,
purpose of their protection?
by statute, they have four rights of claim. So any arrears of wages, any holidays that they've accrued but not taken, notice pay anything that they're entitled to. Normally, it's a week for every full year of service, and redundancy pay, which is
So it's
another
a week for every full year of service. So but
up
my
to a
next question,
maximum
to a maximum of
12 years.
12 years. Okay. Okay.
So 12 weeks.
Okay.
Redundancy is a week for every full year of service, but you must have had worked minimum of 2 years for the business to qualify for redundancy.
Okay.
And then it's a week for every full year of service to a maximum of 24 weeks.
Okay.
However, if you're over the age of 42 years, it's a week and a half for every full year of service. Now, that's the employees quantifying their claim, what the company owes them. How do they go about
Claiming that money.
claiming the money? When the company enters into insolvency, there's a government department known as the Redundancy Payments Service, which steps in the shoes of insolvent companies. Now, what their job is primarily is to make sure the employees are paid their money before anyone else's.
Okay.
So,
Yeah, I
what
was going to
what
ask
I
that.
do,
So my next question was going to be, in which order are people paid? So first and foremost, the people that are paid are the employees.
that's correct. Yes. So
Okay.
employees, then it's anybody who has a legal charge or a mortgage debenture against the company, and then at the bottom, it's the company's trade and expense creditors. However, the rules are changing soon. With HMRC, go for PAYE and NIC, their claims will be ranked as same as the employees.
Right. Okay. Okay.
So the banks are obviously not happy with that because the HMRCs from underneath them have gone to above them. So
Yes.
they will get their money quicker
They're
and
next
more
down
of
on the
it.
pecking order now. Yes.
That's right. Just touching back on redundancy payment service, which is the government department. So, what I like to do as a procedure for my firm is we like to give all employees a redundancy letter. The reason being is then they can claim off their own insurance. They can use that as proof at the job center to demonstrate that they've been made unemployed of no fault of their
Of their
own
own. Yes.
of their own. The second step I always do on site is I explain to the employees how do they go about making this claim from the redundancy payment service. It's all an online application form. So
Okay.
if we'll give them the website, we'll give them step by step what information they will need to have ready before they go on the website. They submit it, and then usually the government time frame is between 2 and 12 weeks the payment will be in their bank accounts.
Okay.
In the current climate, from our experience, it's taking between 2 and 4 weeks and the payments in the employees bank accounts.
Okay.
So like I said, employees have suffered a fault, suffered as a directly not of their own fault. So that's why one of the steps we try to do is to maximize realizations for them as quick as possible.
Okay. And which sectors are you seeing suffer the most at the moment? I mean, it's a widespread problem, and I think some industries more than others, as we know, the hospitality industry, the travel industry, they've taken a massive knock. But I mean, I was surprised to see this morning that I mean, how many retail outlets, and I just read that post this morning. 11,000 retail outlets have vanished. There's been 6,000 new ones from January to June, which means
Okay.
we are still in a deficit of about 5,000 retail outlets. Which particular sectors are you seeing suffer the most with your dealings?
We're seeing anything that's where people use their disposable income and luxury item market, wary about their own unemployment or the success of the business. So they're cutting back that little bit of luxury that they used to spend on certain items.
Yes.
I touched on my last question. We saw a gym. on Friday that we've been instructed on. Their membership went from 1,800 members in March to 600 members as of October, and that
Yes.
was that resulted in a £60,000 shortfall every month.
Yes.
Now that was one of the reason contributing factors. One of the other sad cases that we saw last month was a dance school
Yes.
that
Yes.
had 60 years.
Yeah, and this is it. The more we speak to people, the more we learn about their sectors, and the more we realize how badly they've been affected. I mean, yes, we know about the hospitality sector, we know about the travel industry, but I mean, a dance school is a prime example. You know, and gyms, yes, the membership will go down because there's obviously we're having new lockdown rules being enforced on an hourly basis. And people are fearful of going into an environment where there's so many people. So, yes, interesting. But which other sector? What would your advice be to people from the position that you're sitting in and from with what you're observing? People who are on the fence right now and on the verge. What would your advice be to them?
I would say it's speak to, we're all in it in the same boat. Every business is suffering.
In some way, shape, or
I've,
form.
I've seen I've seen before. I've seen HMRC and banks be more lenient in this period than ever before. Even city councils have been very lenient. So the first thing I always say to people is explore the practical options before you consider the formal insolvency advice. So the practical options being is speak to your landlord, try to get some sort of payment holiday, try to defer some of your rent, or even reduce your rent. Speak to your council with regard to deferring your business rates or some sort of any relief or grants available. Always keep an eye on your city council, local council website because if the government's making grants or handouts or loans, then normally the portal or the method of how they distribute and communicate that is through your local council. So keep an active review on your local council websites. Suppliers, speak to them. Again, try to explore longer payment terms, cre- more credit, etc. Customers, speak to them. Get money in as quick as possible. Reduce your payment terms. So from a cash flow perspective, more money is coming in the bank in a short period of time. Speak to your staff. Reduce your staff hours. That is one of the biggest overheads in
Yes.
the business. And well, furlough comes to an end soon, but there's
Yes.
a new version of it of invoicing out to the government, which in itself. Now, speak to employees, and if you can reduce the working hours for them, you're reducing your overheads. So explore all these options before. Speak to your accountant and your business advisors honestly and
Accountant
transparently.
in these times, I think your accountant is your best friend.
Yeah, yeah, I couldn't agree. I mean, my firm, we get 90% of our work through accountant referrals.
Yes.
And if your accountant, your accountant wants to make sure you're in a nice place, in a good
Yes.
place,
Yes.
not financially, maybe mentally or emotionally.
Yes.
Because what you got to remember, financial distress is just not a financial event; it's an emotional event.
Yes.
I mean, I've had directors who've come to my premises. I'm literally broken down in tears, and they just needed to speak to somebody of how they can get themselves out of the mess they're in. And
Yes.
sometimes, you know, we can use our experience and knowledge and say, you can do X, Y, Z, and there may be a startup or a phoenix legitimately. So we are able to work. So I would say speak to your accountant and any professional advisors. And then if you still need some advice, we're happy there. So go and speak to a licensed insolvency practice. You know, there are people out there who, display smoke and daggers and say insolvency is complicated. It's difficult. It's this and it's
And
that.
that was one of my key reasons for getting you on this morning because, as I said right at the start, some terminologies are used very freely and very openly, but sometimes we don't know what the terminologies mean, and we're sometimes a bit shy, or we presume we know what's being referred to, where in reality we don't. And the options can be simple, and as you say, talking to somebody is key. Speaking to your accountant, speaking to people like yourselves, rather than just going for the, just following the rumor mill and doing what everybody else is doing. Every case and every business I suspect has got its own set of challenges. Is unique, and I'm sure that you find this when you're dealing with your clients. Every business has its own needs. Every business has its own situation, and every situation is unique. So I don't think we should be following what the neighbours are doing or following what other businesses are doing. Speak to yourselves, speak to your accountants, speak to the councils. Check. I mean, there was a very sad story last week of a director actually taking their own life because they were in a situation in which they could not find a way out of. These are distressing times. These are very, very worrying times. But thankfully, there is resource out there, and there is people out there that you can talk to. And you can come to, I mean, if you haven't got the cash flow, then people like yourself can get involved and start the negotiation with the creditors, just to soften the blow and just to extend that payment plan and just to make things a little easier.
Yeah, I mean, as a firm mission statement, we never charge for the first meeting we have with our client.
Okay.
So I always say to the client, you know, if you have electrical fault in your house, you're going to use an electrician. If you have a leak in your house, you're going to use a plumber.
Yeah.
When you have a financial distress situation, you should speak to an insolvency practitioner.
Yes.
Now, if you're concerned about it's going to cost you some money, then we as a firm, we would never charge the client for the first meeting we hold with them. And that
Okay.
is an opportunity for the client to come in, one, to get some form of reassurance of where they are and what they want to do,
Okay.
and two, ask as many questions. They're not being charged for it, and we will help them as
And do
much as we can.
you obviously operate on a national level?
Yeah, I mean, insolvency law, it works throughout England and Wales. So I've done business in a restaurant in Taunton, and we've done a freight logistics company in Middlesbrough,
Okay.
and anywhere in between.
Okay. And you talk about rescue packages. What sort of rescue packages, if any, are available?
Okay, so at the moment, what we're looking at, the first option we always try to exhaust is finance. Because if the company enters in some form of insolvency, it's the end of life for that particular limited company. So
Yes.
the first option we look at is, I mean, we work with a couple of financiers, and what we try to do is open, for example, if we have a client that's got invoice discounting facility, our providers will look at it and see if there's an alternative, a cheaper form of finance available. They'll explore other options. We've successfully been able to put a few deals to Lloyd's, who've been able to provide the C-bills loans for many businesses who've been able to now work their way out of
On the CBILS loans,
insolvency.
can I just ask, what is the cutoff point for the CBILS loans? Can people
I
still
believe
apply for
it's
them?
first of November,
Okay.
but rumor does have it they will be extended.
Okay. Okay.
But that's a rumor.
Okay. We don't know what the government's doing. I mean, I suppose the government's in a very awkward position. It's something that was unprecedented. It was something that no one expected, and every move they seem to make seems to be going wrong. There is no right way of dealing with this. And poor, Rishi Sunak, he's done what he could. He spent as much as he possibly could, and the packages at the initial stages were very, very good. But we're 7 months in now, and obviously the cash flow has to come to an end at some point.
Yeah.
It's just unfortunate now that the R rate is increasing again, and I think imposing a second lockdown is going to be very, a lot harder than it was first time around, because people have the confidence to go out, people have the confidence to meet other people now without really being fearful. But however, the R rate is on the increase, and unfortunately, I personally know several people at the moment who are ill with the virus. It's a very bad situation for the government.
Yeah.
What can one do? What can one do?
They have a difficult job in balancing the health of the nation
Yes,
against the economic
yes.
turmoil that will follow it.
And economically, we are taking an absolute battering, right?
Yeah.
And health-wise as well. I mean, it's you. If there's no health, then there's no business anyway. But economically, we are taking a battering. But the R rate is on the increase, and more
Yeah.
people that possibly myself and yourself know. And when it gets so close to home, when it gets, when people that we know get infected and people that we
Yeah.
know are in hospital, it kind of really brings it home.
Yeah, no, you hit the nail on the head. There've been some great people that we both admire who passed away during this pandemic, and it's been a distraught situation. And I think that's where we are saying people is exercise your caution,
Caution,
think
yes.
about others. We are all in it together. Let's look after one another.
Right. Thank you very much for your time this morning, Majid. It's been very insightful. If people want to get in touch with you, I will put your details on the video. But how can they get in touch with you?
Just drop me an email. Best thing to do.
Okay. Your
Drop me an
your
email.
your company is called,
Insolvency and Rescue Limited.
and where are you based?
We're based in Birmingham and
Okay.
Leicester, but we
Okay.
have satellite offices in Bradford and Manchester.
Okay. So any insolvency issues, any bankruptcy issues, any if you're looking to dissolve your company, if you're even thinking about next month, how are you going to get through next month, or how are you going to get through the next 2 months, and you are having reservations about the longevity and the future of your business, maybe now is the time to speak with a licensed insolvency practitioner. Maybe, just maybe, they can save you from going under. I'd like to thank everybody for joining us this morning. We look forward to seeing you same time, same place next week with another distinguished guest who will be talking to us about business. Make sure to be tuned in throughout the week. We have various shows, faith shows, discussion shows, sports shows, news, and make sure you keep on sharing our channel. We are live on Facebook, we have a website, and all other social media channels. So keep watching ZMT Network, and I look forward to seeing you same time, same place next week.